Have you ever pondered the origins of the banking system that influences your daily life? Our journey begins in the cradle of civilization, Mesopotamia, where ancient temples served as the first banks. Sacred and secure, these temples were entrusted with the community's wealth, primarily in the form of grain. This system of grain loans was also prevalent in ancient Egypt, where the temples stored harvest surpluses and lent them to farmers in times of scarcity. As we venture further into the annals of history, we encounter the evolution of banking in ancient Greece and Rome. The Greeks were pioneers in many fields, and banking was no exception. They introduced money lending on a significant scale and even had rudimentary forms of banking regulation. On the other hand, the Roman Empire, with its sophisticated economy, saw the expansion of banking activities, including money exchange and credit extension. Our historical odyssey brings us to the Renaissance, a period of great awakening and enlightenment. Here we witness the rise of the Medici family, the Florentine power brokers who were instrumental in shaping modern banking. The Medicis established the Medici Banks, which introduced groundbreaking practices like double-entry bookkeeping, paving the way for modern accounting. The Medici Bank also revolutionized the concept of branch banking, with offices across major European cities, from Rome to London. This network facilitated international trade, with the bank acting as an intermediary, providing merchants with letters of credit. This reduced the need for risky and cumbersome transport of gold and silver, a significant stride towards the banking system as we know it today. The Medici Bank's practices were so innovative and effective that they were adopted and refined by subsequent banking institutions. This period marked a significant inflection point in the history of banking, as the rudimentary practices of yesteryears gave way to more complex and sophisticated financial mechanisms. And thus, the seeds of modern banking were sown in the fertile soil of the Renaissance. The story of banking, however, does not end here. As we will see in the next chapter, it is a tale of continual evolution and transformation, shaped by the ebb and flow of economic tides and the relentless march of human progress. From private banks to a centralized system, how did we get there? The journey is as intriguing as it is complex. Let's embark on this historical voyage together. Our story begins in the late 17th century with the establishment of the Bank of England in 1694. This was a pivotal moment, marking the birth of what we now understand as a central bank. The Bank of England was initially created to fund the war effort against France, but it soon became a model for managing a country's finances. Fast forward to the late 18th century, where we find a young nation, the United States, grappling with the aftermath of a revolutionary war and a debt crisis. Enter Alexander Hamilton, the first Secretary of the Treasury. Hamilton proposed the idea of a central bank, similar to the Bank of England, to manage the nation's debt and stabilize its currency. Despite opposition, the first Bank of the United States was established in 1791. Central banks play a crucial role in managing a country's currency, money supply, and interest rates. They are the custodians of a nation's economic health. By manipulating interest rates and controlling the supply of money, central banks can influence economic growth, manage inflation, and stabilize the financial system. The emergence of central banks marked a shift from a system of private banking to a more organized, centralized system. This change was not without its challenges. Public opinion was divided, political battles were fought, and economic theories were tested. Yet the central bank model prevailed, proving its worth over time. As we journeyed from the establishment of the Bank of England to the creation of the first Bank of the United States, we see how central banks emerged from the shadows of private banks to take center stage in the financial system. Their evolution has been marked by both triumphs and tribulations, but their importance in our economic lives cannot be overstated. The central banks, as we know them today, had firmly established their roots in the financial system. Today, they stand as pillars of economic stability, guiding nations through financial ebbs and flows and shaping the course of economic history. How has banking evolved in the modern era? This question takes us into the 20th and 21st centuries, an era marked by significant developments in banking. Let's begin with the creation of the Federal Reserve System in the United States in 1913.